This is my thesis right now. I believe they are going to intentionally destroy the dollar. They're going to destroy the dollar to support the system. I think what they're doing with the stablecoin legislation is they are trying to move the majority of debt issuance to the short end of the curve through stablecoin issue, because you are seeing the governments that used to support our debt are no longer doing so. And they understand that the amount of debt, we have to come up with $28 trillion in debt in 3 years when we only take in $15 trillion in tax revenue. We're not there. They understand that. And we're seeing less and less and less buying of our treasuries. So instead, they passed the stablecoin law where all of these stablecoins will be backed by US dollars. Order have demand for a treasury market that is losing demand. So you put that all on the short end of the curve, right?
The US dollar suffered its worst first-half decline in more than 50 years as fears over President Trump's tariff policies drove down the world's principal reserve currency. To compensate, new legislation regulating stablecoins, a type of digital currency pegged to the US dollar, is widely expected to boost demand for treasuries. The Genius Act, signed into law on July 18, 2025, is expressly designed to channel demand into short-term U.S. Treasury securities by requiring that every dollar of issued stablecoin be backed one-to-one with high-quality liquid assets like T-bills. Treasury Secretary Scott Bessent described stablecoins as a revolution in digital finance that will bolster demand for treasuries and fortify the dollar's global supremacy. Andy Schectman is a well-known figure in the precious metals industry, serving as president and CEO of Miles Franklin Precious Metals, arguing that the government's embrace of cryptocurrencies could also be a long-term dollarizing force. The Senate voted on Wednesday to advance the Genius Act, bringing the bill, which establishes a legal framework for stablecoins, one step closer to becoming law. The bill's co-sponsor, Senator Bill Hagerty, R. Tennessee, said on Wednesday the act would cement the dollar's status as the world's reserve currency. Gold has outperformed both the MSCI World Index and the Bloomberg Aggregate Bond Index so far in 2025, buoyed by relentless demand and a weaker dollar index. Meanwhile, the traditional negative correlation between gold and the dollar over the past decades still holds. However, today's buying isn't just about hedging against dollar depreciation, but also about rebuilding trust in a tangible store of value. Central bank buying is geographically diverse, and according to the World Gold Council, official sector demand now accounts for almost 1/4 of total annual gold inflows, the highest share since the late 1960s. Gold ETF inflows have also surged, with global funds attracting about $30 billion in the first half of 2025 alone, amounting to approximately 322 accumulated tons, the strongest start to a year for bullion funds since 2020, and after nearly $15 billion of net outflows in 2024. In parallel, retail demand for physical gold, particularly in countries like India and China, has surged as households seek dollar alternative savings options. This trend could push spot prices well above $3,400 if replicated elsewhere. Remember to hit the bell symbol and subscribe at the beginning of the video so you don't miss any updates. If you liked the article, please leave a comment below and give us a thumbs up.
And we're seeing less and less and less buying of our treasuries. So instead, they passed the stablecoin law where all of these stablecoins will be backed by US dollars. In order have demand for a treasury market that is losing demand. So you put that all on the short end of the curve, right? Where I think they're going to do it and kind of blur the significance of the long end, which I'll get to in a moment. But I think that's first and foremost what they're trying to do. Remember when Janet Yellen did that, that was good for gold, that was good for stocks, it was inflationary. And I think that's what they're going to try to do. At the same time, they reshore all the gold and they're going to let it go higher and higher and higher and higher. Not very easy for the public to discern. There'll be volatility, there'll be consolidation, but it will keep going higher until people feel it's gotten too high. And then they'll probably come in and revalue it to a level much higher. And they're going to peg it to the treasury. Why would they do that? Why would they peg gold to the back end of the treasury market? The short end, the front end will be backed by these stable coins, which they will pump out by the gazillions because now they have this synthetic demand, not a organic demand like we used to have when we were revered and we ran a surplus and we didn't instigate wars all over the world and fund wars all over the world, and we're not revered anymore. So the back end of the market, who hell wants, and especially when Trump talks about creating all of this money to rebuild our infrastructure. So in essence, printing money to build our infrastructure to compete with the rest of the world. They don't want to buy our treasuries. They will just do the stable coins to get all of this demand for the front end and load the debt there. But the back end, I believe they will peg to gold. As Judy Shelton has said, on July 4th, next year, the 250th anniversary, he has said it repeatedly. Again, she keeps saying it on Twitter. He will peg 50-year Treasury to gold. Why would you do that? And you have to get gold much higher. And I think she keeps talking about gold revaluation. They will revalue gold. And I think Luke Groman, one of the smartest dudes I've ever met, he's talking about revaluing gold. He thinks they'll let it go to $7,000, $8,000, $10,000 and then revalue it to a much higher level to give the Treasury General account $5-6 trillion in free, clear revenue without selling an ounce of gold. And we talked about how that happens. There's miscommunication on that too, because some people think that when the Treasury issues Treasury certificates or gold certificates, gives them to the Fed creates the money, takes the gold, and gives the Treasury money free and clear. Every $4,000 increase is $1 trillion free and clear to the TGA account. The Fed doesn't have control of that gold. They have control of the fiat. They're owed the money value of that gold, not the gold itself. If they do that and peg it to the long end of the bond market. She said 50 years first, shorter durations, maybe 30 and 20, later, maybe 10. But why would you do that? Because now have zero borrowing costs. You can put a zero coupon on that. The gold redemption at the end is the borrowing, is the interest rate, is the inflation gauge. The more foolish we are in monetary policy, the higher the price of gold goes. To be able to get that at redemption would allow for long end low borrowing costs, almost down to nothing, which would then enable us to slowly reshore our manufacturing at very low borrowing costs, and then to grow our way out of this problem eventually. The only way you get rid of inflation and where we are right now is to produce our way out of it. And we're a long ways away from that, because in order to facilitate the amount of debt that we owe, pay it off. Just the $28 trillion in maturing Treasury debt by 2028 with $15 trillion in revenue, we're halfway there. And that doesn't take into account the $3 trillion a year in deficit spending. So you're 25% of the way there. So you have to inflate. They're going to destroy the dollar. They're going to inflate the crap out of it. They're going to use the stablecoin legislation to front load debt issuance into the front end of the market. And then they will let gold go to the heavens. I believe this. Truly, I do. And they will peg it to the long end of the bond market to have zero borrowing costs to reshore manufacturing. To sell Treasury debt bonds at a much longer duration at a zero borrowing cost, redeemable in gold. I think they're going to do this. I truly do. And I guess we'll see. To save in dollars now is the dumbest thing you can possibly do. You're destined to go broke. They're going to destroy the value of the dollar. They are going to inflate the crap out of it. There is no other way. That is my thesis right now. And I'm very, very convinced that this is something that they are, if not implementing right now, it is all of the things that we hear and see. It'd be too long for me to go through the whole litany of them, but I think that's where we're going. So I'm sorry to get off track there, because I still have a few more things to talk about if we have more time. You know, you got Goldman Sachs and JP Morgan forecasting $4,000 gold by next year. I think that's pretty reasonable, actually, on many levels. But assuming that plays out and the gold to silver ratio were to get to 50 to 1, where it's averaged about 45 to 1 for the last 150 years. At 50 to 1, which is very conservative, at a $4,000 gold ratio, that puts silver at $80 an ounce. I mean, you're talking a double. Easy double. And so when I think about where silver could ultimately go, there are so many things that are screaming silver and its value right now. You know, UBS just raised its target to $42 an ounce. That's about an 11% increase. When you look at all of the things that have been happening, to me, whether it be the increase in the lease rate, the lack of shares available to short or to buy to cover shorts on SLV, the massive delay from T+1 settlement in London to T+ in London, the huge deliveries. When you look at the distortions that we find in the silver market, when you look at a simple returning to 50 to 1, even if you went to 70 to 1, where it was just a couple of years ago, that puts silver at basically $60 an ounce. That's a solid 50% gain almost. So you're talking about, I think, the value of a generation. And it seems that things are changing, the way that the market is moving. We're not seeing these massive sell-offs. We're seeing consolidation, choppiness, volatility. The strength is something that is very different than what we've witnessed. I'm very, very, very hopeful for what the rest of the year brings for the price of silver. I find it interesting that the LBMA came out the other day and warned of counterfeited metal, which they said distorts prices by creating artificial supply. And you think about that for a second and think this is the institution that's trading billions in unallocated bullion contracts, selling claims on gold and silver you can't deliver. Doesn't that kind of sound like you're creating artificial supply, counterfeiting in a digital form? I don't know. I'm just throw that out there. I laughed when I read that. But again, UBS is saying 38 to 42 through September 2025. They're talking just in a month through June 2026. So they're basically saying we're right there. By the way, for the people who we're recording this on Monday, the options expire today. So I expect today to be volatile, just like Friday was and Thursday, but I expect it to shoot right back up tomorrow. We'll see if I'm right when you have to wonder, is it a conspiracy or is it reality when you talk about when Chris Powell says there are no free markets, just manipulations. The traders suck in the speculators, and then right at the end, they smash the price so that the options expire worthless. The big banks get to keep the premium on that, and then it goes right back up. They rinse, wash, and repeat. But this is a game that's much more difficult to do so, and it kind of reeks like we're getting to the end of this game. We've heard that before, but things are changing, and it's as dumb as a mud wall to continue this game. I think they know that. Also want to talk about perception. You know, I wrote down homes are getting cheaper in gold. Now, homes aren't getting cheaper, but they are in gold. And, you know, people talk about this real estate deal where homes are so unaffordable. They're not unaffordable in gold if you've been holding gold, because measured in dollars, you're getting crushed. Measured in gold, you're winning. Since 2005, it's fallen off a chart. It's gone straight down. The amount of gold that you need to buy a home, it's at almost all-time lows or very darn close to it. So in other words, gold is keeping pace. The dollar is not. This is the point that needs to be understood, is that gold is not here to make you wealthy. It is wealth that keeps pace with inflation.
Andy Schectman reveals that China is actively encouraging its citizens, not just the government, to accumulate gold through state-sponsored programs, signaling a nationwide strategic move. Last Friday, China launched a new pilot program that, for the first time, allows insurance companies to invest in gold as an asset. Under the program, 10 insurance companies, including the nation's two biggest ICC Property and Casualty Company and China Life Insurance Company, will be able to invest up to 1% of their assets in gold. According to analysts at Minsheng Securities Company, insurance companies could potentially purchase up to $27.4 billion worth of gold as a long-term investment. The Shanghai Gold Exchange, SGE, has been a driving force behind the pilot project, which has been years in the making. During a panel discussion at the London Bullion Market Association's 2024 Precious Metals Conference in October, this grassroots gold accumulation aligns with broader BRICS goals, including a pivot away from Western financial systems. In a revealing interview, BRICS, a cross-border central bank digital currency (CBDC) platform supported by countries such as China, Saudi Arabia, and the UAE, is now expanding to non-BRICS nations, particularly along the Belt and Road Initiative. Meanwhile, BRICS Pay is a decentralized payment and messaging system developed by BRICS countries to facilitate transactions in local currencies across businesses, banks, and governments, thereby reducing dependency on Western-dominated systems like SWIFT. This expansion could further amplify de-dollarization and promote gold-based or local currency settlements outside the Western financial system. Now, let's recall the interview.
Yeah, well, and, you know, they have the state-sponsored accumulation programs for Chinese housewives. I mean, they're pushing their populace into owning gold. You can see this is a bigger deal than just the state owning it. They see a benefit in their constituents across all of China to own gold, and in all of the provinces. It's not just in Shanghai. It's a big deal. An interview that I watched last night blew my mind. And it supports a lot of what I've been saying. It's with the BRICS Pay CEO. His name is Andrei Halyshyn. I'm butchering that for sure, but he's the BRICS Pay CEO, chairman, and founder, Andrei Halyshyn. Anyways, sorry, Andrei, for butchering your name. I'm sure I did. But some things that he talked about. about BRICS Pay. Now, first of all, one of the questions that was asked of him, and we fortunately got this right, was what's the difference between BRICS Pay and BRICS Bridge? He said BRICS Bridge is basically mBridge, and it is a technology that is fully backed, as we know, by China, Hong Kong, Thailand, UAE, and Saudi Arabia. They're the 5 main participants in the BRICS Bridge technology, formerly mBridge, and it is, as he said, a cross-border CBDC platform for central bank, Saudi Arabia to China or whatnot. And now one of the big things that we talked about last time I was on your show was the expansion, according to Sergey Lavrov, of the BRICS Bridge platform into non-BRICS countries. I mentioned the Belt Road specifically, 150 plus countries, 75% of human population, north of 50% of global GDP. They were going to use BRICS Bridge for these central banks to trade with one another. Think of the new Shanghai Gold program. So they will trade with one another across the bridge, free from SWIFT interference, in local currencies, and then settle imbalances in gold. We were spot on that. Very early to say that, spot on, and that's just the beginning. Well, he also talked about BRICS Pay. BRICS Pay is a technology that is B2B, business to business. It is consumer to business, business to consumer. It is bank to bank. It is one notch below the BRICS Bridge program. It is also free from SWIFT interference. They talked about having aspirations of at some point of being integrated with things like Visa and MasterCard, but they're not because of the sanctions that are put on Russia and Iran, and primarily being driven by the Russians right now, the BRICS Pay platform. So they are completely autonomous from the West. He did say that in the future, he sees BRICS Pay and BRICS Bridge being combined, so that you have the central bank portion, you have the B2B portion, all under one kind of big package of breaking free from the West. He said currently their representatives are in China to develop BRIC Pay technology throughout the Belt Road. How do you like that? So the Belt Road is being already integrated. We know this through the BRICS Bridge, and now they're going to open up BRICS Pay on the Belt Road. So not only will the countries trade with one another, as China industrializes them, as they pull the natural resources out of the ground, as they build the infrastructure to industrialize these third world countries in Africa and Asia and South America, they will do so free from SWIFT interference over the BRICS Bridge and settle imbalances in gold through the Shanghai Gold Exchange and all the other exchanges like the one in Singapore and Moscow, the BRICS Exchange. All of these other exchanges will be integrated into this system. But now they have their representatives negotiating in China right now to use BRICS Pay amongst the Belt Road. This is massive, right? So you get all of these business to business, bank to bank, commercial banks, regional banks, not the big central banks. That's the bridge. BRICS Pay would be bank to bank, business to business, business to consumer, etc., integrated through the Belt Road. That is a massive, massive, massive development. And I think it's something that should not be overlooked. He said something, Dunnigan, that kind of was one of these bang moments. And I'm like, holy crap, what did he just say? And I had to stop and rewind it because I bet you no one has heard this before, but I want you all to think about this in terms of stablecoin and in terms of the digital world we are moving into. He said, well, I don't quote, I'm paraphrasing, but pretty close to a quote. He says, they asked him, the gal asked him, she said, there's a lot of terrorism out there and bad people, and how you're not going to be financing terrorism or bad people, more or less. And he said, this is open, guess what he said, to non-BRICS countries as well. BRICS Pay. Not compatible in the West yet, just like BRICS Bridge, but it's open to non-BRICS members. So you're talking expansion, massive expansion. This is what the BRICS naysayers never caught on to. They didn't catch on to it yet with the BRICS Bridge. We did, and we said by Lavrov opening it up to the non-BRICS countries, you have just ignited a fuse under the dollar. Because now it's not just the 10 BRICS countries. You're talking the majority of human population when you throw in the Belt Road, the Shanghai Cooperation Organization, the Eurasian Economic Union, the BRICS, and all of the other countries like the countries in Southeast Asia, the Eurasian countries or the Asian countries rather, that have just signed up to BRICS Bridge. They in and of themselves, with the 5 Middle Eastern countries that did represent 38% of global GDP. Now you open all of this up to non-BRICS countries, bang. Well, now they're opening BRICS.
The convergence of U.S. stablecoin laws signals a global shift in the monetary landscape, the acceleration of gold accumulation by central banks and households, and the expansion of BRICS financial infrastructure. The increased demand for gold and the BRICS alliance's attempts to circumvent Western systems indicate a growing desire for alternative value storage and payment systems, even as the Genius Act seeks to strengthen the dollar's supremacy through Treasury-backed digital assets. The next few years could determine whether the dollar can change or eventually be supplanted as the global financial anchor as monetary power becomes more dispersed. We would be delighted to hear your opinions. Please leave them in the comment section below. If you found this video helpful, please give it a thumbs up and remember to subscribe for future videos.